The tariffs are here, the likelihood of a recession starts to come in, and the altcoins are still not going up. So, what is the impact of the tariffs? That's what we'll be discussing in this update. Let's get started. During these markets, I'm always looking for opportunities to build my portfolio, and OKX is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. To help you a little bit with your portfolio and to celebrate this milestone, they are giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin. Right now, we are in the middle of a storm after the tariffs, and everybody's kind of like anticipating and seeing what can it do. Are we going to have higher inflation? Is that the main topic? All in all, I think that the tariffs itself is within a bigger plan of Trump. And I think that comes down to the conversation that he had with Powell at the beginning of his election period, where he said that he wants to weaken the dollar. And how can you weaken a dollar? Well, you can do that by tariffs, because then the imbalance tweaks the other way around. So at this point, the fact that the dollar is so strong is because the dollar is quite often being used by the other countries. So he wants to reverse that, and he wants to change his entire balance sheet. And he actually is doing the right thing in the sense that with this strategy, he might have a shot of solving the debt issue of the US. And that is more important in the long term than in the short term with just continuing in the path that we used to have. So there are a lot of shock impacts taking place, and it's all part of a bigger plan. But nobody really has a clue where we're going from here. And that's the concern. And that is just bringing me down to having a lot of basic data to work with. And I think that the data and the charts always tell where the markets are going to head to or where the valuations are at. And the fun thing is, on the 2nd of April, he went live and showed the board with all the countries where he's going to implement the tariffs for, which are not really tariffs for tariffs. It is just tariffs because of a deficit or surplus that he had with the actual country, and he just wants to fix the dollar, which is fine. But the fact that he has been doing it caused a lot of impacts into the markets. And the first thing we saw was an attempt of Bitcoin to break through the resistance zone, and that didn't work. Usually when there's a first attempt at a resistance during such an important event, it doesn't really happen. And that's what happened. Markets crashed down again. Liquidation candle downwards, and that ultimately resulted into a lot of uncertainty. We had the Nasdaq falling a lot the next day as well, and that caused a lot of drama. But what we can see is the following: the dollar has seen a massive downwards move at the beginning of this month. And remember, Trump wants to lower and weaken the dollar because that's better for him. This shock effect taking place on the dollar is one of the biggest we've seen so far. So we have two within a window of 2 weeks, resulting most likely into the change from risk off to risk on. So we have a big impact there. And we can see, based on the chart that I've been showing multiple times here from Julien Bittel, the previous times when we had such a big shock impact into the markets, it resulted into a risk-on appetite afterwards. So basically what I'm saying is everything else except for the dollar does well. That is basically the conclusion. And if we have a double shock impact after this, or during this period, that is a double positive sign for what's going to come in the future. And then on top of that, you can actually look at the other charts that we are having here, which is the yields. For the first time in a long time, we are seeing the 10-year dropping beneath 4%. But also the 2 years have been falling off a cliff. And that's good because if the rates are going to go down, it's going to be positive for the balance sheet of the US as they need to pay less interest payments on their own debt. So this entire thing of tariffs is resulting into a weaker dollar, lower yields, but it might also result into, for instance, China starting to sell gold, turn into their own currency, strengthen their own currency while doing QE to strengthen and come out of the recession. And that is also the point for the US. The fact that he is currently doing these tariffs is putting a gun onto Powell's head. There is going to be a short-term impact on the fact that these tariffs will take place. Of course, like a structure or an industry can't really be built up in a few months' time. So likely we will have negative PMI data or negative spending or worse unemployment data. That's very likely. And because of that, and because of that shock impact, it's very likely that the Fed needs to start stimulating the economy to get it going again, to get the domestic country or the domestic economy going. And that is good for the markets overall because that is going to trigger a lot of positive words into the indices and into any asset outside of gold. So that's why the most important chart to look at if you're into altcoins and if you're looking or trying to get a grasp out of this is gold. And gold has been making a nice wick during the event and has come down 3 to 4% already. And the more that one is going to drop, and the likely it is that it's going to happen because the worst is in. The event itself was peak season. I discussed buy the rumor, sell the news for gold. I discussed sell the rumor, buy the news for altcoins. That concept is applicable because after this event, it's very likely that countries are going to strike a deal or he reverses the tariffs in the coming period because he actually got what he wanted, which is lower yields and a lower dollar, which is stimulating the economy in a better way in the midterm. So I don't believe that we should be that sort of bearish or negative about the markets at all. I think all these opportunities that we see are super good. So let's just walk through the charts and see what we can get out of that and see if we can have that actual confirmation. It's funny though. This entire cycle is completely different than the previous cycles. And still, people keep on betting that the history is going to be the same. It's not like that. In one of the recent interviews that I've seen from Arthur Hayes, he and some more people actually start to say the 4-year cycle is gone. And the question is, where are we in terms of the Wall Street cheat sheet? I think for Bitcoin, we are at disbelief. For altcoins, we are at pure depression by default. So what do we need to look at? We need to find the actual reason why the altcoins keep on suffering. Because if we look at the altcoins and the news that we get, all the claims against companies or protocols in the US have been revoked. There's a crypto czar. There's Trump being super positive about a strategic reserve. That is his bigger plan. So if we look at the data, then we know for sure that if the markets were moving based on crypto events, prices would have been going way higher. So crypto isn't crashing based on crypto. Crypto is crashing based on macroeconomic events. So we need to look at different charts to get that confirmation. And that's why I brought up this gold versus ETH Bitcoin chart again, because you can see this downwards move taking place here where gold just nearly doubled. And during this week, based on the RSI that we see here, we are basically peaking, right? So gold is getting a little overextended at this point, which automatically is going to result into a risk on risk off change. So as long as this one is going to drop, it's very likely to expect that ETH goes up, and we are all going to look at it like, why is ETH going up? Because it's not crypto driven. And I think a lot of Web3 people try to believe that it's based on Web3, why Web3 moves, but we need to realize that we all have institutional investors into the markets at this point, and those institutional investors are Web2 based, and they do not care about a 4-year cycle. They have a decade horizon, likely not going to be moving a lot, And that is probably where our markets are heading to. So looking at gold versus ETH Bitcoin is primarily the most important chart. And if we look at the lower time frames for gold, then we can also see that there is a slight sign of this event taking place. Volatility is going through the roof for gold. In the normal way for gold, it's very boring, but you can see that the events have been taking a lot of toll here. While we broke upwards, instantly rejected. The next day we started to fall down, but then PMI came in worse than expected, resulted into a big bounce up. And if we invert this chart to ETH versus Bitcoin, then ETH versus Bitcoin is an absolutely disastrous chart. But you can see that it started to crawl upwards on the moment that gold went down. So I think that pendulum is going to swing. And it's a super important pendulum to keep your eyes on. Just like looking at the price of Bitcoin in itself. And the price of Bitcoin is just moving as a high risk or high beta risk on asset. So Nasdaq kept on falling. Bitcoin actually stayed stable during that period, as you can see on the chart. Although if the Nasdaq continues to fall for a little bit and tech stocks continue to fall for a little bit, that's going to result into Bitcoin going down. But it can... Ultimately, it can happen that Bitcoin falls and Bitcoin pairs on altcoins go up if gold starts to crash too. So it's a little complex situation that we're currently in. But as you can see, Bitcoin has seen its fake move up first. Then it's bouncing onto support again. What is my primarily scenario at this point? I think that we are going to have some lower tests. I don't believe that the entire panic is yet over. If we break $87,000, that's the crucial area to get to the new all-time high. I think if we go through it, we have a new all-time high in a month afterwards. If we fall beneath 82.7, beneath 81, then I think we're going to test the lower boundaries again for support confirmation. Nasdaq is likely going to drop some more. That's going to be the moment where we're going to be kicking in some positive news and reverse back upwards, where in that drop, very likely the Bitcoin pairs go up because gold goes down as well. So what to watch? Gold, yields, the dollar, everything macroeconomic, nothing crypto intrinsic. That's just the current landscape. And that's why I believe that we're not in a bear market, but we're just about to start off the actual bull market that we wanted. I've covered a lot of things in this update, and I think they are crucial to understand the market at this point. Trump's tariffs are not the start of something, they're the end of something. They're the end of a certain period in time where everything was flowing into the dollar. They don't want that anymore. They want to get rid of it, fix the balance sheet, and this is the only way doing it. Which then triggers all those countries, including China, to sell their government bonds, to sell dollars, basically to strengthen their own currency. And from every historical aspect, we have been seeing that during periods where other currencies do well, crypto does well too. So I think knowing that there is the crypto czar and everything that's happening in the US, it's just a matter of being a little bit more patient, and the prices and the assets haven't really been falling since he implemented the tariffs. So I think most of what he was saying on the 2nd of April is already priced in. It's already done. It's actually the peak of an entire period. And I think that gold is extremely overvalued at this point. And if we look at an investment thesis with the most upside, I think gold is skewed to the upside in the sense that there's not much left in the short term. While on the other hand, risk on, which means ETH, is probably the best bet going forward. So remember, macroeconomic events have caused crypto to fall. So macroeconomic events will cause crypto to go up. And when the confidence comes back into crypto, that is when crypto intrinsic events will move crypto again. Until then, it is just a big macro play. And that is where it requires to have some balls and to go into the opposite direction of what everybody's claiming at this point, because that's usually the wrong trade. I'll see you again on the next update Thursday. Ciao.